Well, an interesting article there. I caught the last couple of bits of that and certainly agree with a couple of them. It needs a little bit more explanation for me to believe that units are going to be safer than houses. But I'll bow to Elisa's expertise on analysing those statistics. But moving into a similar frame, we have with me at the moment the SA Executive Director of the Australian Property Council, Nathan Payne. Nathan, how are you?
Very good, Tim, and yourself?
Very well, thank you. Thanks for coming in. Love to drill down on the stamp duty changes and the recent announcement with the budget in terms of what all this means for the mums and dads investors out there and the buyers of property in Adelaide.
Well, I guess obviously the state budget was handed down on the 31st of May. It was a tough budget for the state government, but there was a couple of, I guess, great outcomes for South Australian home buyers. Mm-hmm. The first one was, of course, the extension of the first home buyer boost, yes, which was due to roll down from $8,000 to $4,000. That will be maintained at $8,000, so that's great news for first home buyers.
And that's across all?
That's across all properties.
Yep.
So if you're a first home buyer, you will get that $8,000 boost.
Yes.
The second aspect, which was critical, I think, for the South Australian property sector and for consumers, was the government got rid of the inherent and long-held penalisation that consumers paid in terms of stamp duty on apartments in the CBD. So what the government has done is abolished stamp duty for apartments up to $500,000 if you buy off the plan in the CBD over the next 2 years.
Right.
And even better still, it's up to a maximum benefit of $21,000. Yep. So if you buy a $600,000 apartment, you're only going to pay the stamp duty on the $100,000 difference.
The 500 to 600 gap.
Absolutely.
Right.
So that's really good news for first home buyers and for purchasers who want to live in apartments in the city.
Yeah. So let's make it really clear for people who, because over the last fortnight, it would be fair to say that there've been a few queries. First up, I had someone ring in while we were discussing this on radio the week before last saying, no, it's only for first home buyers. Incorrect.
Absolutely incorrect. It's for anybody buying an apartment off the plan, as long as you sign the contract within the 2-year period, and the period's already started.
Okay, so that's another very important point in my mind, because clearly the rollout of multi-level dwellings can take some time. So it's the pre-commitment within this period, regardless potentially of whether the project, when the project is finished. If you've signed the contract, you're eligible for that rebate, if you like.
Absolutely. You can sign the contract on the very last day of this scheme in 2 years' time, and you'll still get the full benefit. And even if you miss out, the government will equalise the stamp duty regime for apartments with house and land packages for a further 2 years.
Right.
So the benefit's still going to be there. So currently, historically, the way we've levied stamp duty on apartments is you pay stamp duty on the full purchase price.
Yes.
Whereas on a house and land package, you would traditionally only pay it on the land component.
Yep.
So you can pay on a $400,000 equivalent product for product an extra $13,000 in stamp duty. So really what the government has said is they want to get rid of this penalty. They've done that for this 2-year period. After that, though, it will be equalised, so you still won't be paying a penalty.
Right.
You won't get the extra bonus, though, if you sign outside of the 2-year period.
So do you know at this stage, is that going to be assessed on the perceived site value of the apartment, or? Yeah,
they've constructed a methodology which notionally delivers that stamp duty benefit. We have to have a look at that in more detail, but the reality is that's 2 years' time. If the market hasn't picked up, we'll certainly be talking to the government about expanding it. And indeed, we are already talking to the state government about expanding the application to include the inner metro area, which would of course include 45 Park, a great development, but just the other side of Parklands, and the Bowden development.
Yes.
You know, we've had the first release there. We will be seeing 3 to 5 story apartments and townhouses. And there's no reason that just because they're on the other side of the parklands, those purchasers should miss out and continue to pay a penalty.
Absolutely. And I guess you've mentioned 2 significant developments that are on the go at the moment. What other developments are there that you're aware of that are either under construction or about to begin right now?
Yeah, so there's one called the Mandala, which is currently under construction. We held the launch there. I think it's already 10 stories out of the ground.
Yep.
So if you know that if you want to have that certainty, you'll have a key.
Yes.
And you'll get it quickly. You know, that's the one I'd look at.
Yep.
That's just behind Her Majesty's Theatre on Grote Street.
Yes.
We know that Palladium, which is on the old Nordic Motors site,
Yes.
opposite the SA Police building,
Yep.
that's being brought forward. They've said they want to get in during this period. And I know of 3 or 4 other developers which are actually saying they're going to move their projects forward to ensure that consumers of their product get the maximum stamp duty benefit. And I think that's great to see that the industry is moving with the government to help consumers get into apartment living and get the great lifestyle that you get from living in the city.
Yeah. Well, I guess spin-off from all of that is that we're going to see developers on the back of that push their product a bit more so that people can get involved and take advantage of that. We were talking about building in general across Adelaide. How are the figures going in terms of new homes and all that sort of stuff at the moment?
So the housing forecast for 2012-2013 have just come out. It's forecast that we'll see a further decline to about 7,800 first or new home starts,
Yep.
in the next year. That's at record lows or near record lows. It's about equivalent to 1991,
Yeah.
And down certainly off of the 13,000 to 14,000 starts that we saw 3 or 4 years ago. So it's a really big concern for the industry.
Yeah.
It's a concern for obviously the tradies who are working on those sites,
Yep.
and we need to ensure that we get consumers back in the market. You know, we know they're cashed up with the highest savings rates in the Western world at 10.2%.
Yeah.
We've seen 75 basis points wiped off of the RBA's cash rate. You know, now's the time for people to buy, and the reality is if they get in now, they're likely to get the best, the best fit outs for their homes. They're likely to get the best incentives from builders. If they wait too long, I think they'll see those opportunities snapped up by other purchasers.
Well, I was going to say everything is conspiring at the moment to indicate that we have, as you say, the very best opportunity to be buying either new or established homes that there is likely to be for a very long time. With all of those factors playing a part, people really should be into the banks and saying, get my approval in place and, if you like, pinning your ears back and getting into the market. But
I mean, it's all about confidence, and I think for some bizarre reason, you know, a recent poll came out which shows that Australians are more economically pessimistic than the Spanish. The Spanish have 25% unemployment rates. You know, there's no reason for Australians to be pessimistic. In fact, we have a lot to be optimistic about, and I think it's time for people to get back out there, spend some money, buy some new clothes, buy a new house, and really that keeps people employed. It keeps the economy going.
Yeah. Well, listen, we will come back to this discussion again in a few moments' time. Now we're going to go and have a look at our Going, Going, Gone segment.